Hey Warriors, I hope you're all doing good. So, September 2024 exams have just got over. I know you have all put extreme amount of efforts into this attempt, and so I'm very proud of everyone who's attended this attempt. As usual, I'm back to discuss your paper of CA Inter September 24, paper number 3A, income tax loss. And I am not sure what to say. For the last many attempts, we have always been criticizing ICI to say that, yeah, you know what, you're issuing easy papers for income tax. There is no standard to it, and there's so easy papers. Everyone's getting exemption and everything. And then comes in this googly paper. You know, I personally, when I looked at the paper, as a sadist kind of person I enjoyed the paper to the extent possible. But at the same time, I also felt the kind of difficulties the students would have gone through the paper. Not because it's difficult, I would say, more because of the trick it is, right? The kind of, issue you would face to solve the paper and to get that answer in that matter of seconds before your exam, when your exams are going up. So that was something which I felt bad about. But nevertheless, a very, very interesting paper which came up for this time's paper number 3. So yeah, I think let's not waste too much time and let's get into the review of this paper. I have both the papers, people, the MCQ paper and the question and answer paper. Obviously, from the sudden, the MCQ paper also became publicly available, so therefore there was no malpractice this time. But yeah, what we're going to do is we're going to review the whole paper as we do it for every attempt, and I'm going to give you my thoughts on how much you could have scored out of this paper and what could have gone wrong accordingly. Yes, as I usually tell in every attempt of review which I do, this is not for you to discuss and analyze as to where you have gone wrong and what exactly would be your mark weightage. That is not the intention of this paper. Please don't feel disheartened, because if the paper was difficult for everyone, it was standardly difficult. I say think about it very consciously, and therefore would give you grace marks to the extent possible for whatever you have written. So please don't start re-evaluating yourself to the extent that you have to get stressed out about it. This review is being done more from an understanding to tell you as to what you may have gone wrong in case you remember what you have written, and specifically for my Jan 25 students who are using this as a reference point for their upcoming exam. A very good paper for you all to solve, my Jan 25 students. Please do take an attempt to solve this paper even before the answer key comes inside, because then only you will know what kind of difficulties ICI is now expecting out of it, right? This review will help you understand as to what your performance is. Eventually, the substances will come in and may have a difference of opinion from what I am giving right now, because of the complexity which this paper has, nothing else, right? So this is only from that intention which we are doing. I'm going to talk it from that angle. If you're here with the mindset to come and tell me that, Rahul, I think I've done bad, I may got only 20, 30 and all, please stop the video right now itself. Yes, don't come and criticize yourself. This is not the way to do it. This is not the way to do it. If you feel like you've done really bad and you really want to try again for the next Jan 25, now is a good time to start practicing once again. But don't do it with an intention that, yes, I will review the paper today, get what the marks is, see where I'm performing right now and go forward. Please don't do that. Yes, you've taken your efforts, you've done your work, let ICI decide. The rest is what my only request is. On that note, let's quickly discuss the paper, people. I'm going to look at the MCQ paper first. As usual, I'm only going to be discussing that income tax part of it. That's what my expertise is. If what your indirect tax part is what you're looking for, I'm sure there are multiple videos on YouTube which you can refer to and you can understand from there. Let's focus on the income tax part of the discussion. I'm looking at case number 1, people. The case number 1 talks about, it's an MCQ case study question. As usual, I'm not going to read the question first. I'm going to try to understand the MCQs first to understand where the format looks like. Let's look at the MCQs first. It says, which of the following statement is correct in respect of deductions under Chapter 6A? So they want something to be discussed from a Chapter 6A perspective. Let's see what kind of Chapter 6A are they talking about. Second, they're coming in saying, what is the requirement of deduction of tax at source by Game Limited in respect of such winnings? So you have some winnings related adjustments to be checked upon. Then finally, you have something called as, what shall be the total income of Mr. Desai for the assessment year 24-25? Yep. So 3 questions for you to solve from your case study perspective. Let's now read the question and let's understand where do we stand. First thing, it says, Mr. Desai is age 52 years and is also an Indian resident, has given you the following information for the previous year 23-24. Understand that the person is a resident, therefore all incomes is taxable for him. That is what the understanding would be. Profit from the business carried out in Dubai, controlled from Dubai, is 13,10,000, received in the bank account in Dubai. Understand that the person being a resident, it does not matter where you get the income from. Your global incomes are going to be taxable, so I'm going to take this whole thing into consideration. The whole 13,10,000 becomes taxable for me. Loss from a business in Delhi is 4,50,000. You have a profit from a business, you have a loss from a business. Perfect set-offs are permitted, therefore continue to do the set-offs. During the financial year 23-24, he has also played some online games on a particular Indian website, game.com. Game.com is a manufacturer of men's shirts. How can a manufacturer of men's shirts be giving games to you? Anyway, during the year, Mr. Desai won 6 such shirts. The cost of manufacture are given to you as 3,000 per piece, and the selling price of these shirts have been decided as 10,000 per piece, excluding GST at the rate of 18%. However, to play such games, Desai has to deposit a sum of 50,000 with the website as a refundable deposit. So they're saying there is a game.com where you're earning online winnings. We have got an online winnings. Now the online winnings have come in kind, people. Because it has come in kind, that's what you have to be careful about. Now because the game has come in kind, you are getting 6 shirts. Cost of each shirt is 3,000 per piece, whereas the selling price is 10,000 per piece. Now understand, if I am the online gamer, which I am receiving a gift from, the other person will already deduct TDS on me. And if he's going to deduct TDS, why would he be bothered about what the selling price is? For him, he will only look at what the cost price is. So he will deduct TDS on the cost price, which means he's going to deduct TDS at 3,000 per piece. And that is what I'm also going to consider. So my games winnings will be 3,000 into 6 shirts, which is 18,000 rupees. Then on 23rd May 2023, he has gifted listed equity shares in an Indian company to his son's daughter, Mrs. Shania. The shares were purchased by him on 1st April 2020 for 65,000. The market value as on the date of transfer is given as 1 lakh. Sania has sold these shares for a consideration of 50,000 on 31st March 2024. He has given a gift to someone called son's daughter. Now, if he has given it as a gift, I don't see this as a consideration model itself. From the perspective of Mr. Desai, this is not even regarded as transfer because of section 47. So this whole transaction itself is not taxable. Yes. Although let's look at the total income question. They're asking you for Gamma, they're asking you for Desai, they're asking you for game, and they're asking you for chapter Dixon, which means what Shania does is not relevant itself. A useless information given to you just to sway you away. I don't think this information has any relevance with what your computational model is going to do. Yes. Next. Yeah. He has taken a loan of 25 lakhs for the purchase of an electrical vehicle for his personal purpose on 1st April 2022 from a scheduled bank. The payment is 5 lakh rupees as interest on such loan. You are eligible for something called a section 80 EEB, which gives you a deduction of 1,50,000. Yes. So this is the first chapter 6 deduction which you're going to look for. And then it says he opts to be governed by the default provisions of taxation regime, whatever. Because he's going for default regime, now you're not eligible for the deduction itself. You're not eligible for the deduction itself, so I don't even care about the deduction anymore. Great. What is the following statement is correct in respect of deductions under chapter 6A? He shall be eligible for a deduction of 1,50,000. No. He shall be not eligible for any deduction under chapter 6A irrespective of the regime. No. He is eligible if he were gone for the older one. He shall be eligible for reduction of 1,50,000 in respect of interest on loan only if he opts out of default regime. This looks right. And he shall be eligible for a deduction of 50,000 in respect of interest on loan only if he opts out of default regime. Answer is no. This deduction is subject to a limit of 1,50,000 80 EEB. So the answer is 1C. This has nothing to do with actually the case study. It's a random question, but nevertheless. What is the requirement of deduction of tax at source by Game Limited in respect of such winnings? Game shall be deducting TDS at 18,000. Answer is no. Game will be looking at the cost price and therefore he'll be deducting on the cost price value. Game.com needs to deduct tax at source on 5,400. What is my cost price, people? 18,000. 18,000 into 30% will give me 5,400, which is right. So therefore answer is option number B. There is no requirement for deduction of tax at source. However, Mr. Desai needs to collect tax at source from security deposit. Answer is no. Yeah. The final thing is Game Limited needs to deduct tax at source of 6,000. Answer is no. There is nothing called 6,000 in this. So the answer is option number B. Yes, that is what your answer would be. Next, what shall be the total income of Mr. Desai? I think we already have the incomes here. So it is 13,10,000 plus minus 4,50,000. So it is 13,10,000 minus 4,50,000 plus another 18,000 gives you an answer of 8,78,000. Yeah, so option number A is the answer. Option number A is the answer. I think the one thing which a person can probably go wrong is by Game Limited, where they could come and assume that the sale price should be treated as 60,000, I would assume. Yes, the sale price is 10,000, so you have taken 6 shirts, so you'll take it as 60,000. That is the one mistake which probably someone would do. Yes, I would not take that mistake into consideration, people. Don't make such mistakes. The cost price is what you need to take into consideration. Question number 2. question number 4 actually. It says, during the year 23-24, Mrs. Kalia, age is 65 years, person is a resident person, has received 10,50,000 as family pension. She has to spend 26,000 to get such income towards documentation and processing charges, does not have any other income. Assuming she opts for default tax regime, what shall be the incomes? Now, this was an amendment of the current year. The amendment of current year came and clarified that if you are under default tax regime, it does not matter, you will still be eligible for pension family schemes. Yes, family pension scheme comes and says it is 1/3 of the family pension or 25,000 or 15,000, whichever is lower. Yes, 25 is the amendment of the next year. It doesn't matter. I'm looking at 1/3 of the family pension or 15,000, whichever is lower. No expenses will be allowed as deduction. So I'm looking at my incomes, which is 10,50,000 divided by 3 will give me 3,50,000 or 15,000, whichever is lower. I will take 15,000 as a deduction. So which means 10,50,000 minus 15,000 will become the answer, which is 10,35,000. So option number A is your answer. Yes, this is fairly an easy, straightforward question. I don't think this was anything complicated. You could have easily scored marks in it. Let's move forward. We have Mr. Sundaram owning 2 residential house properties in Chennai, one of which is used by him and his family member for their residential purposes. So one house is an SOP house. Both the houses are exactly identical and their expected municipal values are also the same. Okay. He has let out the other house for a rent of 1,15,000 per month. So they have given you the other house being let out for a period of let out for 1,15,000 per month. He took 2 similar loans for the purchase of these 2 houses on 1st April 2022. This is your previous year. The stamp duty value for these houses is given as 30 lakhs each. Okay. During the previous year 23-24, he has paid 4 lakhs as interest of each of the houses. He does not have any other incomes or investments during there and has also failed to file his return of income within the due dates. What shall be his total income chargeable to tax? This is what the provisions are coming and saying. Yes. Now I have 2 houses, people. One is a SOP house, one is a LOP house. In the SOP house, I can maximum claim a deduction of 2 lakh rupees. I can maximum claim a deduction of 2 lakh rupees. Current year, the person has paid 4 lakhs. So therefore, I will restrict my deduction to 2 lakhs. Yes. So therefore, I have now have SOP loss of 2 lakh rupees. I now have a SOP loss of 2 lakh rupees. This is what happens. On the right side, you have an LOP house. On the LOP house, I have 1,15,000 worth of rent, which is multiplied by 12 months. So therefore, it is 13,80,000 as my GAV. 13,80,000 as my GAV. Okay. Next, what is happening? The stamp duty value of these houses are given as 30 lakhs each, which means the house is also less than what do you say? The affordable housing model, which means you have some provisions called 80EE. Yes, 80EE can also be invoked into this thing. We'll discuss about it later. Yes. Next thing, what is happening is during the previous year 23-24, he has paid interest on these houses. Nothing else is given, so I will divide minus 30% on this, which means the NAV net number is 9,66,000. The NAV net number is 9,66,000. My plus 2 lakhs is there, so therefore I'm going to add both. Number becomes 7,66,000 for income from house property. For income from house property. Oh no, wait. You also have to reduce your interest, right? I'm sorry. So you have to reduce your interest from here. So therefore this becomes 5,66,000. So therefore it is 3,66,000 as income from house property. It is 3,66,000 from income from house property. You do have option number B, people, but please understand there is a provision of 80EE. There is a provision of 80EE which comes and says you can claim an additional 1,50,000 on affordable housing where the stamp duty value is less than 45 lakhs. Where the stamp duty value is less than 45 lakhs, which is what is here. I will not claim anything more than 1,50,000 people, and this 1,50,000 which I am claiming is also on the SOP house. It is not on the LOP house, it is on the SOP house. So I am claiming 1,50,000 additional deduction. Therefore, my number becomes 2,16,000. 2,16,000. So option number A is your right answer. Option number A is your right answer. Somehow, no. This is how I say plays. If you notice, question number 3, option number A. Question number 4, option number A. Question number 5 is also option number A. Kind of complications ICA loves to play with you, I tell you. Yes, this is what is happening, so please be careful about it. Anyway, moving on forward. Hey, one thing which you need to keep in mind is that even if you don't file a return on time, it doesn't matter because chapter 6A, heading B and all is permitted as a deduction. It is only heading C which has a problem. Yes, heading C being 80JJAA, 80QQB and RRB. Other sections have no problem at all, which means you can still claim those deductions, perfectly permissible, not an issue at all. I would assume this is one question where people would have made a mistake because of either EEA or making assumptions regarding your return filing and all those things. So that is the one thing which I will probably assume for. Other than that, I think yeah, fairly things should make sense. Case scenario number 2 looks like a GST question, so I'm not discussing that. Case scenario 3 number also looks like a GST question, so I'm not discussing that. Let's look at case scenario number 4. Okay, case scenario number 4 says Prerna is having a residential house property in Nagpur, 1/3 of which is self-occupied and 2/3 of which is commercial property, which is let out for 12,000 ka monthly rent. Okay, fair rent for the let out portion alone is given as 30,000 rupees. So they're clarifying that is only for the let out portion. Please be mindful of that. Municipal value of the property is given as 2,40,000. When they use the word property, it means it is for the whole house. It is for the whole house. So you have to be careful about that as well. Standard rent under the Control Act was 3 lakh rupees for the entire property. Again, this is for the entire property. Municipal values, municipal taxes are given as 10% of the municipal values and are paid by her on 30th July 2023. It is paid in the current previous year, therefore it is allowed as deduction. She took a loan of 45 lakhs for the construction of this house from a scheduled bank on 1st April 2021. Okay. Paid the entire loan along with interest on 30th June 2023. So current year itself, you have paid off the whole interest also along with the loans. Okay, great. Interest rate for the loan is given as 10% per annum. Construction was completed on 30th June 2022 itself. 30th June 2022 itself. The one thing which you need to keep in mind is that Rahul, the construction was completed on 30th June 2022. Yes, which means from April to March of 22, there was something called as a pre-construction interest which you need to mindful of, which you need to be mindful of. She earns other incomes of 2 lakh rupees during the previous year 23-24. She wishes to opt for default tax regime. The person is opting for default tax regime again. Yes, something about this MCQs to house property, all case study related questions. All case study related questions. Somehow they have played with you. Yes, during the previous year 23-24, this is what the facts are given to you. Based on the above information, they're asking you to look for some facts. Deduction in respect of interest and loan for the previous year 23-24. Now this one will be a little tricky, people. Let's pay attention to it. I'm saying you have a loan of 45 lakhs. Yes, on this loan of 45 lakhs, technically the interest rate is 10%, which should be 4,50,000. Which should be 4,50,000. But please to understand the fact that the person is not having the loan for the whole year. He's not having the loan for the whole year. The question comes and says she took a loan of 45 lakhs and has repaid the entire loan along with interest on 30th June. Which means in the current year you only incurred an interest to the period of 3 months. So therefore, current year you have to multiply it by 3 by 12, and therefore the interest is only 1,12,500. This is your current year ka interest. Yes, point number 1. Second, I am coming and saying that Rahul, for this period you also have a pre-construction interest. You also have a pre-construction interest from the period 21 till the period 22. So which means 1 year. Which means 1 year. So therefore the interest on that period is 4,50,000. But since it is pre-construction interest, you have to divide it by 5. Yes, so it will be 4,50,000 divided by 5. Number comes as 90,000. This 90,000 is what you need to allow from the year in which the house was ready. Which means 22-23 is the first year. So 22-23, 23-24. So 23-24 is also the period of pre-construction interest, which means current year you will get an additional interest of 90,000 rupees. Total interest becoming 2 lakh. So plus 1,12,500, number becomes 2,02,500. 2,02,500 is your pre-construction interest. Is your pre-construction interest. Now, if you notice, this is the total interest which are allowed as deduction. This is the total interest which are allowed as deduction. Notice carefully that there are two. One is called as commercial property and one is called as let out. One is called as commercial property and one is called as self-occupied property. Now, since the person is opting for default tax regime, no interest on loan can be claimed on the self-occupied property. No interest can be claimed on the self-occupied property, which means you can only claim interest to the extent of 2 by 3, which is the let out part of it. So it is into 2 divided by 3, which becomes 1,35,000. Yes, so 1,35,000 is the maximum interest which you can claim as a deduction because the person is opting for default tax regime. Default tax regime. Please bear that in mind. Hey, the previous question which we did they come and clarify that the person is going for default? Okay. Yeah. We'll come back to this question, people. I think we need to rework this question once again. There is something which is tricky and I understand it right now. Okay. Let's wait for it. We'll come back to this and we'll come and do it. Point number 14 ka answer is 1,35,000. Point number 14 ka answer is 1,35,000. That is what you need to keep in mind. Yes. Point number 15. You're required to compute the total income for the assessment at 24-25. let's look at the assessment year 24-25. We have only income from house property and income from other sources. So let's look at my income from house property. My income from house property has been clarified to have 12,000 into 12 months. So which means 1,44,000. Yes, 1,44,000 is my actual rent. Let's look at my other things. They're coming and saying my municipal value is given as 2,40,000. So my municipal value will be 2,40,000 into sorry, give me 1 second. Yeah, so it is 2,40,000 into 2 divided by 3, which becomes 1,60,000. So my municipal value is 1,60,000. My fair rent is given as 30,000 per month, which is 1 lakh. Sorry, 30,000 per month is only for the let out portion. Wow, that's a big number. So it is 30,000 into 12, which is given as 3,60,000. Yes, so my municipal value or fair rent, whichever is higher, therefore it becomes fair rent. Comparing it with the standard rent. Now, how much is my standard rent given? They're saying that the standard rent for the entire property is 3 lakh rupees. Yes, so it becomes whichever is lower, and therefore my final number becomes whichever is lower, which is my 3 lakh rupees. My 3 lakh rupees. The expected rent is now 3 lakh rupees, whereas my actual rent is given. No, it's not 3 lakh rupees also. 3 lakh rupees is for the entire property. Yes, so it is not 3 lakh rupees. You will multiply it into 2 by 3, which means number becomes 2 by 3. So therefore it is 2 lakhs. Yes, so it is municipal rent or standard rent, whichever is lower, and sorry, fair rent plus standard rent, whichever is lower. Therefore it becomes 2 lakh rupees. So now it is not fair rent also. Now it is not fair rent also. It is only standard rent, which is 2 lakh rupees. I'm comparing standard rent with the actual rent, whichever is higher. Therefore my final answer becomes 2 lakhs. Yes, so therefore I will now tell that my GAV is 2 lakhs. I will now tell that my GAV is 2 lakhs. I didn't understand why did they have to complicate it so much. They could have rather kept it consistent enough, but nevertheless, might as well. Let's do it. Minus your municipal taxes. Now municipal taxes, like they're coming and saying it is 10% of the municipal value. Municipal value has been given for the entire property as 2,40,000. So I will take 2,40,000 into 2 divided by 3. I'll get 1,60,000 into 10% of that will give me 16,000 rupees. So 16,000 is what my deduction is. So 16,000 minus 2 lakhs will give you 1,84,000 as your NAV. On this NAV, I'll get 30% as standard deduction. So minus 30%, number will come as 1,28,800. 1,28,800. I've already computed the interest on loan people, which was 1,35,000. Yes, so I will remove 1,35,000 out of this. My answer will come as 6,200. My answer will come as 6,200 as a loss. Now, because I have a loss, I can adjust this against my income from other sources. The question comes and says my income from other sources is 2 lakh rupees. Correct? No. Correct? No. No. Answer is not correct. Answer is not correct. Please understand the person is opting for default tax regime. Because the person is opting for default tax regime, provisions of income tax come and say any losses from house property cannot be adjusted against any other incomes and will be carried forward. So my LOP loss will just like that be carried forward and cannot be adjusted, which then leaves me with my only income of 2 lakh rupees. My God, the level of complication they have in this adjustments. I tell you, for 2 months you're making too much efforts. NAV of the property has been asked for you. I think we've already found out the NAV of the property. NAV of the property has come as 1,84,000. So that's what the answer is. Fairly, I think a person would have got NAV properly. I am a little doubtful on what you would have got on point number 15 because default tax regime level of complications they've asked is too much. Question number 14. Yeah, I think if you have done default tax regime properly, you'll get the answer. I'm coming back to this question, people. I think now I understand what kind of question they were trying to understand and ask out of you. Hey, one thing which you kind of forgot and which is an amendment of the current year is that the moment you made it a default tax regime, the provisions of default tax regime come and say that you will have to choose for default tax regime as a standard thing. If you want to opt out for it, you will need to file a form before the due date of return filing. And for those who have done this practically would realize that you can only file a form along with the return, which means when you have not filed a return, it is so assumed that you have not even opted for the alternate regime. Now, when you have not opted for the alternate regime, the primary assumption would become that you are now into default tax regime. Yes, with your idea into default tax regime, SOP losses is not granted to you anymore. So this is gone. Second thing, you will not be granted any kind of 1,50,000 deduction also because you are under default tax regime. With that and all happening, I think the answer now becomes point number C. Answer now becomes point number C. Hey, this is a little too much if you come and ask me. This and all is something which a person will not be able to realize during exam time. Yes, 5 lakh 66 and all. I mean, at a certain point of time, when I read the question also, I kind of made a mistake. Yes, expecting that a student sitting in an exam hall realizing the fact that not filing a return would mean that he's going for default tax regime is a little too much. Yes, so if you come and ask me, I don't know. I think this is not a question a person would have been able to answer. But yeah. Okay, let's do an analysis of the MCQs and see where you would have gone wrong. I think definitely question number 1 and all, no one could have gone wrong, so you would have gone 2 marks here. Yes. Question number 2, you could have made an assumption on the 18,000 or the 6,000 part, and therefore I would feel that this may be a mistake, so you may not get marks here. You may not get marks here. Coming to the total income part, I think this was again dependent on your game income. So if you have got the game income properly, then you will get question number 3 properly. If not, then this is also an issue. This is also an issue. I think right now I've scored only 2 marks. Okay. Point number 4, I think this is a straightforward thing. You should have easily got marks. It's 1/3 only, so that's not complicated about it. You should have got this easily. So 3 marks with me right now. 2 and all, I don't know, people. I mean, if you have really got point number C as the right answer, then you're really great. But if you have not, then yeah, I would be on your side on this. So this and all is definitely something difficult. Leaves me with my case study question. Interest on loan, I think, yeah, you should have been able to score this. You should have been able to score this. So 3 plus 2, 5. Total income question, again, default tax regime. I think many people make a mistake on the set off of losses and everything. So I still don't think that you would have got this properly. Again, I'm just being cynical about the conservative crowd of people who are average based. Yes. And the last one, I think last one is fairly easy. Last one you should definitely score. Yes. So which means out of the 15 marks of MCQ, 7 is what you would have scored. I don't know, people. Honestly speaking, yeah, MCQ to this extent is definitely not something you should have done with. But yeah, I mean, it is what it is, right? Nevertheless, let's move to our questions, people. Let's move to our full-fledged questions and let's see if you're able to do something better here and score your better marks. Although, yes, on a random overall reading, my reviews are not great with these questions. I looked at the question number 1 and compulsory question and I somehow lost faith in it. Yes. So yeah, I'm just going to look at it once again for you along with you people to see where you have done what, and then we'll take it from there. Yes. Look at question number 1. It says, Mr. Ramanan is a resident individual aged 62 years, meaning the person is a senior citizen and is engaged in the business of manufacturing and sale of spare parts of motorbikes. The moment you see that the person is in manufacturing, it means you are eligible for additional depreciation unless and until the question says otherwise. Next, he prepares his accounts on a mercantile basis, meaning everything is done on accrual basis, which is great for me. The business is carried out on the ground floor of a 2-stored commercial building owned by him. The return on value is given as 8 lakh rupees as on 1st April 2023. Now, I've been seeing a few videos from other faculties who have been reviewing the paper to come and tell me that, Rahul, it says ground floor of a 2-story building, which means I'm a little confused whether it's a 3-floor building or is it a 2-floor building. Yes. Now, I think this is a little too much for you to come and assume about. I would assume that when you say ground floor of a 2-story building, it technically means a ground floor and a first floor, full stop. Yes. So I would assume it's a 50-50 split. I would not assume anything else. Let's not make life too much complicated than what is supposed to be, people. That's what my only request is. In my practical assumption, I would say there are 2 floors. That's all. He prepares his accounts on an accrual basis. I think they're repeating the lines again. See? They're just repeating themselves again. This is what happens when you try merging multiple questions together. The statement of profit and loss for the year ended 31st March 2024 are given to you with a net profit of 9.25 lakhs, which is before taxation and depreciation. So they've taken no depreciation into it, which means I will have to grant a depreciation now. Yes. So my 9.25 lakhs is my net profit. On this, I will have to grant a section 32 depreciation. Yes. Now, this comes and says that the return on value of a building is given on the ground floor, which means to the extent of the business, I would have only used the ground floor for it. When the return on value is given as 8 lakh rupees, 10% depreciation will come into picture, and therefore I will get 80,000, but only half of the building is what I'm using. Therefore, I'll divide it by 2, which means I'm eligible for a depreciation of 40,000 on this. Right now, I'm sticking to this. Yes. Now, before I start reading the adjustments, let me quickly go and let's understand what exactly does the question want out of you. The question says you are required to compute the taxable income and tax payable for the assessment year 24-25 by Mr. Raman under default regime and optional regime as per the normal provisions of the Act, and also tell which option is advantageous. Oh my God. How much marks is this question? You're looking at 15-mark question, 3-page adjustments, and they want both the regimes also. Okay. I don't know, people. Let's see how much difference will come in optional and default regime. I'm again not going to solve the whole question along with you people. I'm just going to giving the adjustments and let's tell what happens in each regime. If there is a change in the regime, then we'll discuss about it. Right now, I've done net profit, removed 40,000 rupees, same as both regimes. Let's look at the items. It says you're debiting and crediting the following items. Traveling expenses include 2,40,000, which is expenditure incurred on a foreign tour to Taiwan for attending a business exhibition and meeting with vendors. Out of which 40,000 was incurred in Indian currency and 2 lakhs was incurred in foreign currency. Okay. Raman has spent 10 days in Taiwan, out of which 4 days were utilized by him for attending marriage ceremony of a vendor's son. What the? Okay. Let's read it once again. It says traveling expenditure is including 2,40,000. 40 is paid in Indian currency, 2 lakhs is paid in foreign currency. Raman has been there in Taiwan for 10 days, out of which 4 days were utilized by him for a marriage ceremony of a vendor's son. Okay, I have multiple questions relating to this adjustment. I don't know how to answer this. First thing is they are coming and saying the payment is happening in Indian currency for 40,000 and the payment is happening in 2 lakhs in foreign currency. I don't know how this is relevant at any point of time. Yes, because nowhere in income tax do they come and say that if you pay it in Indian currency, I'll allow, or if you pay in foreign currency, I'll allow. There is no such provision anywhere in income tax. This is a very, very complicated kind of a provision. But nevertheless, let's ignore that. Second part of the question comes and says you are spending 10 days in Taiwan, 4 days were utilized by him for attending marriage ceremony of a vendor's son. Now, okay, there are multiple combinations to this. Hey, proposal number 1. If you come and tell me as a person who's practically handling direct taxes, I would come and say that attending the marriage of a vendor's son is a business transaction. Understand, you would have been called for the marriage only because your vendor is a business relationship guy to you. Yes, and so therefore what expenses I incur for that should be allowed as a deduction. I don't see a problem here. In that case, I would come and say this whole adjustment makes no sense. I have no problem because it's a complete business expense. Option number 1. Option number 2, you may come and say, Rahul, when ICA is putting so much efforts and giving this adjustment, the assumption would be that this is a personal payment. This would be a personal payment. Now, here is where my question is. If you make an assumption that this personal payment, how much do you disallow in this? Because the wording says it is traveling expenses. Now, honestly, come and ask me, people. If I'm coming and saying that I've incurred traveling expenses, let's say I've taken a flight from here to Taiwan and I've incurred 2,40,000 for it. Now, whether I go for 4 days trip for wedding, or I go for 1 day trip for wedding, or I go for 9 days trip for wedding, at the end of the day, one of the days were used for my office meetings, which means that isn't sunk cost. Whether I go for the wedding or not, I would have still had incurred the 2,40,000 rupees. Agreed, not agreed? Yes. If I would have anyway incurred the 2,40,000 rupees, whether I go for the wedding or not, I don't see a reason why I need to disallow, even if it's personal. So if you come and ask me, option 1, I would come and say this is a business expense and therefore make no disallowance. Option 2, I would come and say it is a personal expense and still make no disallowance because I have not incurred anything during that period. I have incurred it for travel. Option 3, let's become more conservative and come and say, no, Rahul, 2,40,000 comes in means all expenses including the accommodation during that period. In which case, now I need to come and ask you, tell me, if the question is saying 40,000 is in INR and 2 lakhs is in foreign currency, the primary assumption would be that 40,000 which you have incurred in INR is for the flight cost. And that would be the sunk expense. Which does not have to be disallowed. So I will ignore the 40,000. On the 2 lakhs is what I will do this computation, where I'll come and say 2 lakhs is my total expense. In the 2 lakhs, I have stayed in personal nature for 4 days divided by 10 days, and therefore 80,000 is what I'll propose a disallowance. Option number 4, the most conservative opinion. You come and say, Rahul, the whole 2,40,000 has to be prorated. The whole 2,40,000 has to be prorated, which means 4 divided by 10, number becomes 96,000. Giving you a question with 4 different combinations, I don't see how this works. And this is the first question opening in the compulsory. Now, I don't know who's going to watch this video. I'm really hoping that someone from ICA watches this video. But if you're doing that, please grant the benefit of doubt to the student and give them a grace mark for every adjustment they make. Whether they decide to do no disallowance, whether they decide to do 80,000, whether they decide to do 96,000, my humble request to the ICI members to please grant a complete benefit on this adjustment, because yeah, it's a very weird adjustment. I think the question itself is not clear to what they're expecting out of it. Yes, so please do grant and benefit to the students. Do not make a mistake here. You've already done a very difficult job in the MCQs. This is not something you should be testing upon. Yes, an adjustment like this looks very weird for an CA inter student at least to be answering. So please do grant them additional benefits. Anyway, administrative expenses includes 9525, which is paid towards interest on delay in deposit of GST. People, any kind of interest which is paid under GST, straightforward, we have been discussing this in the class multiple times. This is a compensatory nature, and therefore, since it is already debited to P&L, I will not have to make any disallowance, meaning I will ignore this information. I will ignore this information, has nothing to do with my question. Next, general expenses are including a sum of 3,83,000, which is paid to a non-resident for fees for technical services without deduction of tax at source. I think we have discussed this in the class multiple times. When you see a word called deduction of tax at source, you have two options. If it is a resident, it is 30%. If it is a non-resident, it is 100%. In this case, it is a non-resident. Therefore, you will disallow the whole 3,88,000. You will disallow the whole 3,88,000. Next, fire insurance premium of 66,000 for the entire building remain unpaid until 31st March 2024. Understand, people, the person is in mercantile system of accounting. With the person being in mercantile system of accounting, he paying or not paying does not matter. He paying or not paying does not matter. So I have no problem with this adjustment, except for the fact that what you did not realize is this is for the entire building. This is for the entire building. And if you notice on the top, it comes and says that the business building is only half of it. The business building is only half of it, which means the assumption is that the entire half cannot be the 66,000 cannot be claimed as reduction. Only half of it can be claimed as reduction. Because the other half is also debited to P&L, you will have to disallow 33,000. You'll have to disallow 33,000. Here is a case where they did not have to mention the unpaid part. Had they left it with just the top, people would have guessed it and they would have disallowed 33,000. Giving it an unpaid made a confusion to the students, where they came and assumed, okay, maybe there is something called 43B to be looked into, which was not the case. So yes, a small mistake could have happened here also from your side. Expenditure of 75,000 was paid out of a scientific research association approved under 35. Out of 75,000, 50,000 was utilized for purchase of land by the research association. So I'm paying 75,000 to a research association approved under section 35. I am contributing to another association. Now, when I contribute to another association, I don't care what the other association does with the money. I have contributed. Yes. So when means I contribute to the association, I will claim a deduction of the full 75,000, and therefore there will be an ignored information. A confusing part of it where they have come and clarified that the resource association has purchased the land. Now, honestly speaking, I don't care. Understand, the restriction of not having a disallowance on land is only when you have an in-house R&D. This is not an in-house R&D, people. You have contributed to someone else, and when you contribute to someone else, it is 100% allowed as deduction, which means the whole item will be considered. But please understand, this is ignored only under alternate tax regime, meaning if you are doing default tax regime, let me put it in another color. If you're putting a default tax regime, you'll have to disallow the 75,000. Giving you information relating to land was only to confuse you in this. You would have made a bigger mistake if you would have disallowed the land part of it. You should have not done that. Yes. Next. He let out first floor of his commercial building to Mr. Aman on 1st April 2023 and has received a rent of 35,000 per month. See, this I think kind of now makes the clarity. If you're coming and telling me that the ground floor was used for business and the first floor was let out, it obviously makes no sense that the person would come and say ground floor is business, first floor is let out, second floor is again business. That's not how it works. Yes, so the ground floor is for business, the first floor is let out. I think that's a very clear assumption with this right now. It means it's a two-story building. That's what the answer is. He let out the first floor of his commercial building to Mr. Aman on 1st April 23 and has received a rent of 35,000 per month. Municipal taxes are given as 20,000 relating to the business, which were paid equally both by Mr. Aman and by Mr. Aman. Yes. Now notice this line carefully. I'm coming and saying the building is having the first floor and ground floor. Ground floor used for business. The first floor is used for let out. Yes. So the first floor part of the let out will be taxable under the head income from house property. First floor will be taxable under the head income from house property. The question says that the rent received was debited to P&L account. How does the rent received become debited to P&L account? What the hell? Oh, I'm sorry. Okay, I'm reading it wrong. It says the rent received was credited. Okay, sorry. Yeah. The rent received was credited and the municipal taxes was debited to P&L account. Because the rent received was credited, I need to first remove it from the PGBP statement. So I'm going to remove how much? 35,000 into 12, which means 4,20,000. which means 4,20,000 is what I'm going to remove, from my PGBP statement, and I'm going to add it to my IFHP. So under IFHP, I will take 4,20,000 as an GAV. As my GAV, there is no other information given, so I'm assuming GAV is the answer. Yes. Second, they're coming and saying municipal taxes of 20,000 is relating to building and paid equally by Raman and Aman. Since they're using the word it is relating to building, it means it is for both the flows. Now here is where the question is. Understand, it says 20,000 is paid equally by Raman and Aman, which means I would have in my P&L only debited municipal tax of 10,000 rupees. Which is pertaining to my building. Now, if it is pertaining to my building, which I have used for business, that is anyway an allowable expense. So I have absolutely no problem. I will come and say nothing to be worried about. On the municipal taxes component, which is there in my P&L. To the extent the municipal tax was paid by Aman, which is my tenant, I cannot claim a deduction because he has paid it. Municipal taxes provision come and say you can claim it under HP to the extent you have paid it and not the tenant, which means my municipal tax becomes zero. Now, if you come and ask me, Rahul, because it is becoming zero there, I should have put it in my P&L. Understand? Only half of it would be there in the P&L. Why would I put the second half which Aman has paid? It is not my expense. Yes. So therefore, my NAV becomes 4,20,000. The NAV becomes 4,20,000 minus 30% will be the answer. Therefore, your net number will become 2,94,000. I don't see any interest on loan anywhere. So therefore, this is what my income from house property will look like. Yes. Again, a very tricky adjustment where you could have made a mistake on the municipal taxes part of it. Last part. He sold a piece of land for 44 lakhs on 12th April 2023. 12th April 20. Okay. Yeah. He has acquired the land for 40 lakhs on 1st January 2022. The gain of 4 lakh rupees is credited to P&L account. First of all, because the gain is there, you will remove the gain. From the PGBP statement. And then do the capital gains. Your full value of consideration is given as 44 lakhs. Your cost of acquisition is to be indexed, correct? No, it is not to be indexed because this is a short-term capital gains. The asset was used for less than 24 months. And therefore you will directly do a cost of acquisition. Price is 40 lakhs and therefore your net profit will be 4 lakhs, which will be considered as your short-term capital gains taxable at slab rate model. This is what the answer would be. Giving you CII and all is confusing information. Correct? No? January 23. Yeah, it's still confusing information. It is less than 24 months, people. Yes, although it looks like two different financial years, it is less than 24 months and therefore you will not get a indexation benefit. So which means this is what your full value of consideration will be, and you will tax it at slab rate model, which means there is no tax permits. Yes, next. Additional information says Mr. Aman has purchased raw materials from Paul Industries, a micro enterprise. Okay, they won't test you on the amendment part of it. For 49,000 on March 10, 2024. However, the payment was made to Paul Industries on April 5, 2024. No return agreement was existing between Paul and Raman. Now, because there is no agreement in place, there is a timeline of 15 days. If I'm looking at 15 days, March 10 length of 15 days, it will become March 25. Which means you should have made the payment by March 25. Since the payment has not been done by March 25, this 49,000 will now have to be disallowed. 49,000 will have to be disallowed. It will be allowed as deduction in April, which is of next year. In the current year, it will get disallowed for you. Another supplier, Cull Industries, a small enterprise is also covered, with whom also no written agreement is in place, was paid 1,34,000 in cash on 5th April 2024 for purchase of raw materials on 31st March 2024. Both Paul Industries and Cull Industries follows mercantile system of accounting. Notice this very carefully, people. Two things are taking place. One is that I am coming and saying that the payment is happening next year. And the payment is happening in cash in the next year. Now, from a 31st March perspective, today on 31st March, when I accrued the expense, I have a timeline of 15 days to make the payment. Have I made the payment within 15 days? Answer is yes. Which means to that extent, my payment is allowed as a deduction. Coming to the cash payment of it, Section 48(3)(a) comes and clarifies that the day on which you pay the cash is the day on which it is treated as income. Which means in 31st March, I have no problem. On 31st March, I have no problem. The problem will come in the next year when I make the payment, which is not a part of my year. Which means for 31st March, there is no problem here. For 31st March, there is no problem here because 31st March I have accrued the expense and that is allowed as a deduction. That is allowed as deduction because the payment is happening within the due dates. Because the payment is happening within the due dates. This was a combination question between 48.3 and 43B, a very, very good adjustment to be noticing about. Yes, although not something which you should be tested in exam because, yeah, it complicates life a little bit more. But nevertheless, an adjustment tested, a very critical adjustment which you need to be mindful of. Mr. Aman has acquired a registered trademark on 15th July 2023, current year, for 2 lakh rupees. Raman started using the trademark in his business on 15th January 2024. Raman has omitted to enter any transaction relating to this trademark in his book of accounts. An intangible asset purchased but forgot to be recorded. You will claim depreciation at the rate of 25% on the same. You will claim depreciation at the rate of 25%. But the problem is the asset is put to use on 15th January. So you'll divide it by 2 again. So which means technically you will claim depreciation at 12.5%. Claim depreciation at 12.5%. Next, Raman has bought a car for personal use on 12th April 2020 for 5,40,000. He started using the car from business purposes from 1st April 2023. As on that date, the market value is 2,10,000, assuming the rate of depreciation is 15%. A section 43 explanation comes and clarifies that when you have a building which is brought into business, you will have to provide for notional depreciation. But when you have a car which is brought into the business, you will take it at the actual cost price. You will take it at the actual cost price. I don't care whether you brought it at market value or not. For me, from the purpose of depreciations, I will take the actual cost price. Actual cost price being 5,40,000, and therefore I will grant depreciation on 5,40,000 at the rate of 15%. At the rate of 15%, that is what would happen. Yes, again, a place where people could have gone wrong, they could have come and taken 2,10,000 as an adjustment, you would have not got marks against it. Next, he has incurred 2,50,000 on purchase of new machinery to be used in the production of spares of motorbikes on 15th May 2023. So he has purchased a new machinery, 2,50,000 kaga. 2,50,000 on purchase machinery will be eligible for normal depreciation. So which means it will be 2,50,000 into 15% available to you because it is there for more than 180 days. But because the person is into manufacturing operations, if you are under alternate regime, you can also claim something called as an additional depreciation at the rate of 20%. At the rate of 20%, while this will not be eligible in case you opt for default tax regime. This will not be eligible if you opt for default tax regime. Next, he has paid a tuition fees of 25,000 for the education of his daughter to a college. He has paid a tuition fees. This is your section 80C. This is your section 80C. You will get a deduction under 80C. Again, not eligible if you are opting for default regime. So which means under default regime, right now I have noticed 3 adjustments. Adjustment number 1 is on the top, which is relating to your scientific research disallowance. Adjustment number 2 is your additional depreciation, and adjustment number 3 is your tuition fees. All these need to be factored inside for you to recompute your incomes and then do tax on the same. Next, during the year, Mr. Raman has incurred 9,000 in cash for preventive health checkup, where 5,000 was for himself and 4,000 was his parents, who are super senior citizens. Understand, because you have done a health checkup, you are only permitted for a maximum of 5,000 for the whole year. Because you're permitted only 5,000 for the whole year, you can do it in any combination. I don't care how the combination works, whether you do it for self or you do it for parents, either way works. You are eligible for only 5,000 as a deduction. You're eligible for only 5,000 as a deduction under section 80D. So I will get 5,000 ka deduction under 80D, but this will again get denied if you're opting for default tax regime. Finally, any kind of donation paid to registered political party by way of check is 20,000 rupees. Now, the one thing which I want you to probably understand, people, is that this donation which is granted in additional information. And nothing in this question comes and clarifies that the person is debiting this to P&L, which means I would make an assumption that it is not part of the P&L account. Which means I will directly give a donation deduction alone under 80 GGC of 20,000 rupees. It will only be granted under alternate regime once again. So therefore, I will grant a deduction of 80 GGC under alternate regime of 20,000 rupees, which will get denied in case you opt for default tax regime. This is what the question looks like. Yes. So which means what my recommendation would have been if I would have done this question is that I would have completed the whole question from an alternate regime perspective and then taken the total income of alternate regime, added back the 4 items: the GGB, the GGC, the ATD, and the GGC, the ATD, the ATC, the additional depreciation, and the scientific research. These 4 things you could have added back, and then you could have done your tax rate computation. Which means if you would have not spent your time redoing the whole default tax regime, you would have saved a lot of time. But here is where the problem is, people. A 15-mark question with so many adjustments which makes no sense. First is definitely point number 1. I am really hoping they give you grace marks on this. If they do give you grace marks, then you're safe. Otherwise, yes, screwed up adjustment. Then you have your point number 5. You have your point number 5 where you could have gone wrong with your contribution deduction. Point number 4 where you could have gone wrong into not making the disallowance of your 33,000. Point number 6 where you could have made an assumption that the 10,000 rupees which is debited into P&L account has to be disallowed. Point number 7, in case you opted for indexation. Point number 1, the ignoring part of it where you could have definitely gone wrong. Point number 3, in case you chose to do FMB. Point number I think everything else you could have fairly got. But with the length of the question, you may have most likely not completed default dredging also. Yes, so I'm looking at so many questions adjustments, people. It's basically like 1, 2, 3, 4, 5, 6, 7 adjustments where you could have gone wrong in a 15-mark question. It's like a question where you could have hardly earned, let's say, 4 or 5 marks, not more than that. Yes, if you have ended up spending a lot more time than the then probably 10 minutes on this, yeah, you're not really going to reap any benefits out of it. I really hope someone gets a grace mark for the question number 1. Otherwise, yeah, I'm just not really sure. Question number 2. Mr. Madan is a citizen of India and Karta of an HUF employed in PCS Private Limited. So there is a person who's a Karta of an HUF also, but is also working in PCS Private Limited. He is drawing a monthly salary of 65,500 in India. Okay. On 1st June 2023, he purchased one residential property in Mumbai for 18 lakh rupees in his individual capacity. Person has decided to purchase a house. Okay. The market value of the property is given as 32 lakhs and the value of the value for the purpose of purchasing the stamp duty is given as 23 lakhs. So when he purchased it in June 2023, the stamp duty value has been quoted as 23 lakhs and the market value is quoted as 32 lakhs. I don't think the market value is of any relevance unless and until it was purchased before 2001, which means this is an information which has no relevance. But also do bear in mind that the purchasing of stamp duty in 23 lakhs is important because now you know that when you purchased it, the stamp duty value was 23 lakhs, whereas you purchased it for 18 lakhs, which means you have got this for an inadequate consideration. In which case, you need to check for the 110% criteria. 18 lakhs from 110% will become 19 lakh 80,000, which is still lesser, and therefore the differential of this is going to be taxed as your IFOS gift. You'll have to offer this to tax under section 56(2)(10) in case you forgot. On 31st August 2023, he was transferred to the branch office of PCS Private Limited in USA and has left India on 1st September 2023. Okay, looks like a residential status question, which means I was in India for April, May, June, July, August, September only for 1 day. So 31, July will become 31, June will become 30, May will become 31, April will become 30. As of now, this is what the number is. Let's see if there is any other information also. And has left India on 1st September 23. The overseas branch has paid him a salary of 2,500 per month in USA when he was outside India. He managed business of USA from, the HUF from USA when he was not in India. Okay. He has also gone out of India for 99 days and 201 days in the previous years 22-23 and 21-22 respectively. And before that, he was always in India. He visited India on 1st January 24 and was there in India till 15th January 24 for training of a project. So again, you're coming back in January. So January, you are there for 15 days. And has received 15 days salary in India as per the Indian monthly salary before being transferred. Mr. Raji, one of his friends, gifted him a sculpture in India on August 10, 2023. The market value is given as 45,100. This will not be taxable, people, because you have a specified mobile property and the provision says on an aggregate basis, you should have received a specified mobile property exceeding 50,000 rupees. Has not happened. You're required to determine the resident status and the of Mr. Madan and his HUF and compute his gross total income for Mr. Madan for the assessment year 24-25. Assuming that he opted out of default regime, the value of USD can be taken as 70 if it is required. Now, one thing from an HUF perspective, people, I think I can answer it right away. Understand the provisions of HUF comes and says when the control and management was wholly or partly in India, it becomes a resident in India. Since the person was in India for a certain amount of time, to that period he was there in India, it was part in India, and therefore I would say HUF is a resident directly. I don't have a problem here. Now coming to the other person, let's look at the total. What is the total now? It is saying 30 plus 31 plus 30 plus 31 plus 31 plus 1 plus 15 I'm getting 169 days. Yes, let me check this once again quickly. 30 plus 31 plus 30 plus 31 plus 31 plus 1 plus 15. 169 days. Yes, which means the person is a non-resident. Understand, people, the person is an Indian citizen leaving India for employment. The moment a person is an Indian citizen leaving India for employment, you are now a non-resident, because condition number 2 is not to be checked. Because condition number 2 is not to be checked, so the person becomes an NR. The person becomes an NR. That is what the provisions are. That is what the provisions are. Now, at any point of time, does the question come and talk about? Yeah, I think this is what the provisions would be. Determine the resident status, and they are also asking to compute his gross total income. Oh my god, how many marks is this question? For 4 marks, you need to do so much, is it? Anyway, yes. So first thing which I'm deciding is that the person is an NR. The person is an NR. Now coming to the other part of it. They're also asking you to tell the determined resident status of HUF. Now if you want to know the HUF is a resident, but the question is, if the HUF is a resident, you need to split them into ROR and RNOR. ROR and RNOR. How do you do that? You need to check for the Karta's previous 7 years stay. Yes. Now if you notice the Karta, previous 7 years he was always there in India. Yes, except for the last 2 days. Except for the last 2 years. So therefore it will still be more than 730. It will still be more than 730. Coming to the last years. Last year this person was 99 days in the current year and 201 days. When he was there for 201 days, that year also he was a resident. And for all the prior 9 years also he was a resident, which means he was there as a resident for more than 9 out of 10 years, more than 9 out of 10, 2 out of 10 years, and therefore I would come and say that the HUF will now become an ROR. The HUF will become an ROR. With the HUF becoming ROR, I think that answers the question. But they are also asking you to compute the gross total income of Mr. Madan. Now notice carefully, because Mr. Madan is a non-resident, for whatever incomes he earns outside India, it will not be taxable. Yes, so I'm going to tax only a few incomes. IFOS gift taxable. He is receiving salary in India. Is receiving salary in India of 65,500 into how many months? He is there for April, May, June, July, August. I won't give him September salary. Yeah. So April, May, June, July, August, which means into 5 months salary. So that becomes 3,27,500. It becomes 3,27,500 for the months of April to August. Yes. Then he again came back. Then he got a salary in US salary. This US salary is not taxable because the person is a non-resident. Yes, they paid everything in outside India also. Therefore, it is not a problem. He then comes back in India on 1st January to 15th January and gets the training and receives a salary of 15 days salary as per the Indian salary. So which means the 65,500 which he was getting, another 15 days he is getting the same number. So number becomes 32,750. Adding these two numbers, I will get 327,500. Total becomes 360,250. 360,250, on which I'll give a standard deduction of 50,000 rupees, and therefore your taxable salary becomes 3,10,250. 3,10,250. This is my income from salaries. I have an income from IFOS. I can take both them into consideration, and there is no other incomes. Sculpture has become exempt from tax. So my gross total income should become 3,10,250 plus another 5 lakhs. Which means my total income is 8,10,250. This is my GTI. This is what my provisions will look like, people. Again, a very, I would say, not a very complicated question, but it's still an average question. Asking you adjustments relating to your HUF and all was definitely a complication. Yes, so you should have been extremely careful on this question. Thinking about this question will take really efforts. Yes, I would still not say person would get the whole 4 marks. You would have gone wrong here and there. Definitely on the sculpture part, people get very hurried about it and they would end up not taxing the number. So therefore, you would have made a mistake there. Anyway, point number B. Mr. PQR Co, a proprietorship firm of Mr. Yogesh, paid an amount of 30,500 to Mr. Amit, a resident individual aged 45 years, on 1st June 2023 towards fees for professional services. Okay, a firm of Yogesh. How does a firm have a name called and Co? Okay, anyway, has paid an amount of 30,500 to Mr. Amit, a resident individual, on 1st June 2023 for fees for professional services. Subsequently, another payment of 60,000 was due to Mr. Amit on 30th January 24. Tax was not deducted on both these transactions. Mr. Amit has then filed his return of income on assessment 24/25 on 2nd May 2024. That guy is quick. Taking into account the professional fees from MPQR and Co and paid taxes due on the same in the return filing income. What are the tax obligations in the hands of PQR and Co on the assumption that the accounts of the firm are audited under section 44A, B? Now, what are the obligations? First of all, the provisions are coming and saying the moment you are making a payment to another person for fees for professional services, any payment above 30,000 rupees should have been deducted TDS at the rate of 10%. Since the payment is happening more than 30,000 over the year, therefore the TDS should have been deducted. And since the question comes and clarifies that the person is liable for audit, it means TDS is mandatory. Otherwise, you would have called on hijacker. You would have spoken about hijacker and said TDS is not mandatory. But here they come and say TDS is mandatory. Yes. What are the tax obligations now, people? Because the person has forgotten to TDS, they will have to pay an interest under section 201. They'll have to pay an interest under section 201. How does it work? You will have to first find out how much tax you are supposed to pay. On the 30,500, you are supposed to pay a tax of 3050. You are supposed to pay a TDS of 3050. You have not paid TDS right from what period, people? You have not paid it from June. So it is June, July, August, September, October, November, December, January, February, March, April, May. So it is 3, 6, 9, 12. So 12 months ka you will be levied an interest at the rate of 1%. Yes. So you'll get 3050 into 1% into 12 months. Number will come as 366. Second, this person has also not made a payment of 60,000 rupees, and that also TDS was not deducted. 60,000 ka TDS will become 6,000 rupees at the rate of 1% once again, and this payment is done in January. So therefore it is January, February, March, April, May, 5 months. Therefore it becomes 6,000 into 1% into 5. Number becomes 300 rupees, which means the person is liable for an interest of 666 rupees to be paid off. The person is liable for an interest of 666 rupees to be paid off. That is the obligation which the person will have to fulfill. Yes. Second, also, I would come and say that because the person has not deducted the TDS before 31st March, you are also liable for a disallowance under section 40A IA. You are also liable for a disallowance of section 40 IA, 90,500 into 30%. 90,500 into 30%, which means you will get a disallowance of 27,150. You will get a disallowance of 27,150. This is the second obligation. So these are the two tax obligations which you will have as a proprietorship firm for not deducting TDS on time. I don't know, 99% of the cases students don't read the TDS chapter and go for exam, so you may have chosen to skip this. Noticing point number A, I would assume that you would have not written question number 2. That is the question which you would have left in choice, is what my assumption would be. But let's check what the other questions are before we make those decisions. Let's go forward. MS Faster Limited is an Indian car manufacturer. During the previous year 23-24, it sold cars of 150 lakhs to MS Race LLP, a distributor of cars where the sale price of each car was 7.5 lakhs. We are somehow in TCS along with TDS. The turnover of 22-23 for Fastest was 15 crores and Race LLP was 8 crores. What shall be the TDS and TCS implications? People, 206C 1C comes and clarifies that when it's a sale between distributors, TCS will not apply. Which means then it comes to TDS part. Now TDS will only apply when I am the deductor and I have turnover more than 10 crores. Looking at the person who's making the payment, who's the person making the payment? During the year 23-24, it sold cars to Race LLP. So which means Race LLP is the one who's having a payment. Race LLP is having a turnover of 8 crores and therefore this will not be liable for 194Q. Because 194Q is not applying, 206C 1C will also not apply. And 206C 1H comes and clarifies that if you are already having the asset covered anywhere else, 206C 1H will also not apply, which means in this case there is no TDS implications. There is no TDS or TCS implications. Yeah, again, people would have not done this question because they would have not read through it, but a very, very tricky adjustment, people. Even if you have read the syllabus and gone, you would have made a mistake here because people would make an assumption that even though 194Q will not apply, 206C 1H can apply. Yes, 206C 1H will not apply because the car is already covered under 206C 1C. Next, the particulars given below of Mr. Rade's income of age 47 years posted in a private company Delhi are given to you. Looks like a full-fledged question once again. Let's check what the question requirement is. You are required to compute the taxable salary income of Rade for the assessment at 24-25, assuming that he is opting out of default regime. You're going into alternate regime and doing salary computation. Okay. First thing they come and say basic pay is 35,000 per month till Jan 2024, and then after that it becomes 40,000 per month. So it is 35,000 into Feb and March alone is not there, so therefore it is 10 months. And then for 40,000 into 2. 40,000 into 2. Generally, they will give you this question when the question has an average salary computation. Let's check if there's any average salary computations. Next, DNS allowance is 30% of basic salary. So whatever basic salary you have to do 30% on it. But then they say 54% of the DA benefits forms part of retirements. So whatever 30% you compute, other 54% is forming part of retirement benefits. We'll need to check that part. Yes, next. Leave encashment received for the previous year 23-24 is 10,000 rupees. Now, notice this question carefully, people. Although you may have been having the thought that it's an average salary model, please understand the leave encashment has been received during employment, and therefore this number is fully taxable. Therefore, this number is fully taxable. There is no exemption granted against it. There is no exemption granted against this. This is a fully taxable amount. Next. He has received a salary for the month of April 2024 in advance on 31st March 2024. Also, he has received an arrears of salary for the month of March 23 in the same day. So, on 31st March 2024, he has received two salaries. One is arrears of salary, one is advance salary. Now, when it comes to the advance salary is definitely taxable. Advance salary is definitely taxable, and therefore the amount becomes 40,000 rupees because it is for the month of April. So you'll have to add this number. Coming to the arrears of salary, I think here is where the question is. Just because you're receiving arrears of salary, does it mean that will it be taxable right now? I would say no. Salary tells it is due or credit, whichever is earlier. Unless and until it was a disputed salary, it was technically already taxable in the month of March itself. And therefore the company would have already done the taxes on that month of March itself, or he would have offered it to income last year itself. When he's already offered it to income in the last year, I don't see it to be taxable in the current year. You can also make an assumption that this is not a salary which was taxed in the past years, and therefore it will be taxable right now. Although that's a wild assumption to make. I don't know what ICA will do. My request, ICA should give an alternate to both. It's not a big deal. Next. He has been given a rent-free accommodation fully furnished from Delhi on 1st April 2019. The house is owned by his employer. During the year 1920, the perquisite value of such rent-free accommodation was valued at 39,000. Okay. The employer also provided with him a facility of a gardener to maintain the house. Why do they have to give you information of 1920? I don't understand. Okay. The perquisite value of the house is given as 39,000. The employer also provided him with the facility of gardener to maintain the house. The salary of the gardener paid by the employer was 1,000 per month. Now, who's paying the salary? Okay, the company itself is directly paying the gardener's salary. The furniture and appliances provided with the house was bought by the employer at an aggregate cost of 1,50,000 on 1st January 2020. Okay. Electricity and water bills of 4,000 per month for the said house was also paid by the employer. Now understand, people, there is something called specified employee, non-specified employee. Where the provisions come and say that if you are a specified employee, then it is taxable, but if you're a non-specified employee, these items are not taxable. The thing is, in this question, the salary is itself exceeding 50,000. When the total salary is exceeding 50,000 for the whole year, there is no question of having a non-specified employee, which means whatever you see here is fully taxable. Now here is what the question is. Understand, there was an amendment in the current year for RFA. And the amendment in the current year came and said that RFA will be taxable as 10% of the salary component, but in the future years it will not be taxable that way. But the provisions of the RFA came and said the future years will only start from the current year, in the sense that this is the amendment year, and therefore from the current year only the amendment can come into force. Prior years RFA is not of a criteria itself. Which means I would come and say this is an irrelevant information given to only confuse you. The only thing which you need to keep in mind is that I have an RFA in the current year of the full year. I have an RFA along with the house. I'm also being given furniture. And the house, where is this person getting this house? The person is getting the house in Delhi, and the house is owned by the employer. Which means for the first few months you will get 15% of salary, and for the next few months you'll get 10% of the salary. Salary here means basic plus DA forming part plus turnover commission plus all taxable allowances, which means the leave encashment which you took should also become taxable component. Apart from that, you'll also be taxed for the gardener house. You'll also be taxed for the gardener's facility. You'll also be taxed for the electricity and water charges. Yes, so you will have to tax the gardener's cost also, the electricity and water charges also. All the numbers have to be taxable. Yes. Next, the employer also spent 50,000 on refresher course for upgrading Radhe skill, exempt from tax, people. Any educational facilities provided for the employer will be increasing productivity of the employee and therefore will be exempt from taxes. During the previous year, his wife has been admitted in a notified hospital for treatment of her kidney disease. The hospital bills amounting to 3,50,000 was paid by the employer. provisions of income tax come and say that when any medical facilities are given to the family members, any medical facilities given to the family members, if it is done in an approved institution where the disease is a notified disease, then the income is exempt from tax. The income is exempt from tax, so this becomes exempt from tax. You are now required to compute the taxable income of the salary, assuming that the person is opting out of default regime. So you should have taken the salary, you should have taken the DA. DA, whether forming part or not forming part, will be required for your RFA computation. Leave encashment will become fully taxable. You need to make an assumption on the advance salary and the arrears in salary, and then comes in your RFA part. Please note that for RFA computation, the salary component also needs to be taxed. Now here is where I have a certain problem. When they say 15% before certain period and 10% after certain period, when you're taking 15% of salary, will you take salary for how many months is the question? Because please understand, you have technically taxed the whole 12 months here, and then you have an additional tax here also. Which means, do you have to spread this 40,000 over the period of 12 months and then compute 15 and 10, or will you make an assumption that this 40,000 will be added to the next 10% bracket? Is where I'm a little confused. I don't really know what the answer would be on this. Yes, this is a very tricky adjustment once again. Ideally, this should not be the year where they should have tested this. This should have been a better tested in the next year. In the current year, when you have a multiple split of 15 and 10, I don't think this level of complications were supposed to be asked in the exam. 6-mark question could definitely not worth it. But nevertheless, I think you should have easily scored at least 2 to 3 marks in this for the other items. The perquisite part, the refresher course, the medical facilities. Even if you would have got the complete answer wrong, at least you could have scored 3 to 4 marks. Maybe not 3 to 4, maybe 2 to 3 marks in this adjustment. So you should have been careful to that extent. Yes. Okay. I don't know at which point of time am I going to be convinced that the paper was easy. Anyway, point number B says Mr. Raj is a resident individual aged 69 years. So you have a senior citizen. Has sold an urban agricultural land for 75 lakhs to Mr. Vipul on December 15, 2023, when the stamp duty value of the land was given as 95 lakhs. Now understand carefully, people, this is an urban agricultural land, so capital gains will apply. You have sold it for 95 lakhs when you purchased it for 75 lakhs in December 2023, which means the asset is a short-term capital gains. However, the agreement to sell on the land was entered into on 15th July 2023 when Mr. Vipul gave 4 lakhs as advance through IMPS. The stamp duty value was on the date of agreement as 85 lakhs. Understand, when the payment is made in advance and the payment is done by permissible modes, stamp duty value on the date of agreement can be considered. Yes. Now if I'm looking at my stamp duty value, it is 85 lakhs. 75 lakhs is the 10% quota. You'll get 82 lakh 50,000, which means it is still lower. So your full value of consideration will become 85 lakhs. Mr. Raj has paid 1% of the sale consideration as commission to the broker. So which means you have a transfer expense. You have paid 1% of the sale consideration, which means you have paid 75 lakhs 1%, which is 75,000. This is your transfer expenses. Yes. Next, the land was purchased by him on 15th May 2002. Okay, the land was purchased in 15 May 2002 for 10.85 lakhs, which means the land is a long-term capital asset. The asset is a long-term capital asset, and it was used for agricultural purposes by him since its purchase. So it was purchased for 2002, which means this is a indexed cost of acquisition where you have to do 10.85 into whatever indexation rates they give. Mr. Raj purchased another agricultural land in rural area on 1st January 24 in the same year itself for 40 lakhs, and the land was sold by him on 12th March 2024 for 45 lakhs, and he invested the entire sale proceeds in fixed deposit with the nationalized bank on the same day. Okay. Compute the capital gains for the assessment year 24-25. Raj exercised the option of shifting out of default regime. The inflation indexes are given to you, which is 348 divided by 105. 348 divided by 105. You will end up getting your capital gains, people. Now here is one thing which you probably need to keep in mind. In the classes also, I came and told you multiple times. We discussed only 3 exemptions: 54, 54 EC and 54F. But I also came and clarified to you that when you get a capital gains question in exam and you suddenly see that the person is buying things, it is nothing but an other exemption. This is an exemption under section 54B. Where it comes and says that when you have an agricultural land which is sold, and if you buy another agricultural land, you will get an exemption. Now how much you have purchased it for a price of 40 lakh rupees. So this 40 lakhs will be given as an exemption. I think my 10.85 should never go more than that, but let's check quickly. 10.85 into 348 divided by 105, number becomes as 35.96. Yeah. So which means you will have a capital gains of 48.29. You will have a capital gains of 48.29. Since you have invested 40 lakhs out of it, 40 lakhs will be granted as an exemption. 40 lakhs will be granted as an exemption, leaving you with a taxable capital gains of 8.29 lakhs. Taxable capital gains of 8.29 lakhs. Now, the one thing which you also need to note is that whenever you buy an asset, capital gains provision has a certain restriction, saying that you have to not sell it within a certain period of time, otherwise it will become taxable. The only problem in this question is that the person has purchased a rural agricultural land. Rural agricultural land. Now, some of the golden rules which I came and discussed with you, saying that when the assets which are sold and the assets which are bought are the same, the exemption which you get will be reduced from the cost of acquisition. Will be reduced from the cost of the acquisition. Meaning, when you sold the rural agricultural land, it is technically to be reduced from the cost of acquisition. The exemption which you got will be reduced from the cost of acquisition. But in this case, it does not matter, people, because the rural agricultural land is exempt from tax. A rural agricultural land is exempt from tax, which means I will come and say my long-term capital gains taxable for the current year is only 8.29 lakhs and there is no further tax. There is no further tax. This is my only capital gains. This is my only capital gains. This complete information is of no relevance except for coming and clarifying to you that this is a investment. This is an investment. Question number 3. I think, yeah, not that you could have got the complete score on this, but nevertheless, I think 6 and 4 you could have scored probably 5 or 6, not more than that. Yes, with the capital gains of 54B, which people generally don't read and go, you may have made a mistake there. But other than that, I think you should be able to score 6 marks or 5 marks at least out of it. Let's check the last question and see if you're able to score anything in this. And if we are able to score 4 properly, we could have probably ignored question number 2. Let's see if question number 4 is solvable. It says, Mr. Suraj is aged 39 years and his wife Megha is aged 35 years. Minor son also they have of age 12 years. Looks like a clubbing question. Provides the following information for the income and losses for the current year. They've given you Suraj Oda information, they have given you Megha Oda information, and they've given you Dev Oda information. A 6-mark question which is coming and asking for the total income of Suraj also, Megha also, Dev also. Assuming that Suraj has decided to pay tax on a default regime, Megha and Dev are deciding to opt out of default regime. Oh wow. I would have come and assumed you should do 4, but yeah, this looks like a lengthy question. So I have Suraj, I have Megha, I have Dev. Suraj is going for default tax regime, Megha is going for alternate tax regime, and Dev is going for alternate tax regime. Yes. Mr. Suraj comes and says that he has received a salary as a partner from a partnership from 6,15,000. He's a working partner from the firm and the salary is as per the limits of the prescribed model, which means the PGVP income will become 6,15,000. Yes. Understand, people, any salary claimed deduction in the hands of the firm will become taxable in the hands of the partners. Next. Income from house property loss is given to you. Brought forward loss of house A is given as 96,000. Now, because the person is a default regime guy, you can only set off the losses against income from house property. Since there is no income from house property given in the question, this will again get carried forward. Second, they're coming and saying current year also the person has a loss, which means this also will get carried forward. Please understand, people, a loss from house property cannot be set off against income from house property. Cannot be set off against any other heads unless and until you are opting for alternate regime. In default regime, you cannot do the set offs, and therefore this will also get carried forward, ignoring both the information. Interest received on enhanced compensation is 2 lakhs. It relates to a transfer of a piece of land in financial year 18-19. Out of the above, 35,000 pertains to 23-24 and the balance relates to preceding year. I think there are multiple questions we have done like this in exam in the class premises, where we have come and clarified that when it comes to interest on enhanced compensation, it is taxable in the year of receipt. It is taxable in the year of receipt fully. And 50% of that will be allowed as a deduction. Because 2 lakhs is there, I will tax 1 lakh as IFOS income. I will tax 1 lakh as IFOS income. Yes. Next, gift from grandfather's younger sister by check. Grandfather's younger sister by check. Now, it is my grandfather's younger sister. Understand, I can only have a relative in my own family circle. In my own family circle, grandfather's sister is a different circle altogether, which means this gift is fully taxable. This gift is fully taxable, IFOS income. Next, dividends on listed equity shares of a domestic company, gross. Gross means TDS is already taken into consideration, therefore it is 50,000, fully taxable under IFOS. On 1st December 23, Mr. Suraj received 75 lakhs as maturity proceeds from his life insurance policy, which was taken on 1st May 2022. He has paid 6 lakhs as annual premium and the sum assured is 65 lakhs. People, the provisions prior to the amendment of IFOS comes and clarifies that if you are having an insurance where you're paying a premium which is less than 10%, understand, if it is prior to, if it's after 2012, if it's after 2012, you can maximum pay a premium of 10%. 65 lakhs is your sum assured. 10% of that will become 6.5 lakhs. Since you have paid a premium of only 6 lakhs, this transaction fully becomes exempt from tax. That is what the provision would say. And therefore this transaction will not be taxable. You can ignore the complete transaction. Great. This is what my Suraj income is. So this is what my incomes will look like. I will just add the incomes and I'll get my answer. Mrs. Megha. Current year losses from business. She has carried on this business with funds which Mr. Suraj gifted to her. 8,10,000. Notice the funds are given by Mr. Suraj and the business is having a loss, which means Suraj is not done completely. Suraj now has an IFOS loss, business loss. Suraj is now having a business loss because this will now be clubbed in the hands of Suraj. The loss is how much? 8,10,000, which means I will remove 8,10,000 from PGBP income. Because the number is higher than my PGBP income, I can set this off against other heads other than salaries also, which means I will do one thing. Let me put it in the bottom. Because I can adjust against any of the above incomes. I don't see a salary anywhere. So I will reduce it from any of the above items. Next, Mrs. Megha purchased a house property from her Sridhan, okay, and gifted the same to her minor son, Mr. Dev, on 1st April 2023 out of love and affection. The fair market value of the house on the date of transfer was given as 51 lakhs. So what is she doing? She is having a property which she has given to her minor son. Okay. On 1st April 2023 out of love and affection. The fair market value of the house is given on the date of transfer as 51 lakhs. Now understand, this is a transfer between the transfer of house property between a mother to his minor son, Any kind of transfer happening to minor son will be treated as a deemed ownership concept. The only problem in this question is I don't see where the rent is coming from this property. Okay, it's there in the next line. Right now I will say Mrs. Megha has nothing to do with it because this is a minor son's income. Let's come back. Mr. Dev is now given. Yes, Mr. Dev says rent received from the house property received from Megha. Understand, people, provisions of IFHP comes and clarified. Then any property which is transferred from self to a minor son will be treating me as a deemed owner. This is not a clubbing provision. This will be taxable under the head income from house property, and therefore whatever rent which they have received will now become taxable in the hands of Megha. Normally a person will be confused and come and say how clubbing of income will apply and therefore it will be taxable in the person's hands whichever is higher. This is not that case. It will be taxable in the hands of wife. And therefore 35,000 into 12 will be fully taxable in the hands of wife. So 35,000 into 12 will become 4,20,000. This is my GAV. On this GAV, I will reduce 30% standard deduction, and therefore my income from house property will become 2,94,000. Understand, this will be taxable in the hands of Megha, not in the hands of Dev, because Dev is receiving it under income from house property provisions and not under any other provisions. Also, please note that because it is taxable as income from house property, there is no 1,500 exemption also. You won't get that exemption also because it's income from house property. Yes, coming to Dev, I think there is nothing there for Dev, which means what will happen? Dev ka there is no taxability. The answer will close here. Now, 6-mark question. If you come and honestly ask me, a person would have probably made a mistake on the income of 2,94,000. The income from house property mistake is what you would have probably made. Other than that, I would assume if you know default tax regime, the loss from house property would have been taken care of. So I would assume that a person could probably go wrong on alternate regime and the alternate regime of Megha and Dev, and therefore probably out of 6 marks you could have scored 4. 2 marks is what they would have cut out of this. Yes, great. Last question for you. It says Vegetable Limited has filed its return of income on 23-24 on 15th December 23. 23-24 on 15th December 23. Okay, great. 2nd January 24, the accountant of the Vegetable Limited realized that he has forgotten to claim a genuine business expenditure amounting to 15 lakh rupees. He wants to file a revised return to claim such expenditure as the assessment is not yet completed. Can the person do so? Answer is no. Answer is no. Please understand, return filing due date ends on 31st December. When the return filing due date ended on 31st December, you could have only revised the return by 31st December, even though it was a belated return. But since the person has asked for the same on 2nd January, this is beyond the due dates and therefore no revised returns can be filed. A very simple, straightforward thing. I think you could have easily scored marks on this. You just had to write one answer. Yes, next. Point number 2 says, Mahindra, a resident individual aged 45 years, has earned a salary of 2 crores during the financial year 23-24. He has also earned dividend from unlisted shares amounting to 4 lakh rupees. He wants to file his return of income of assessment year 24-25 through a tax return preparer. Can he do so? Answer is yes. Answer is yes. I don't see a problem here. TRP provisions come and say that you cannot do it in case the person is liable for audit. And the liability of audit only comes when your business turnover is more than 1 crore. Since the person is earning salary income and unlisted shares income, it is still possible to do so. It is still possible to do so. So you can do yes. If you knew this provision, then great. Otherwise, let's look at the OR condition. Yes, let's look at the OR part of it. It says, Rani is an Indian resident aged 34 years, did not file a return of income for 21-22, 22-23 and 23-24. Okay. She has given the following information to you. For 21-22, the tax payable on total income of Rani is 14 lakh 50. The TDS deducted is 5 lakh rupees. 22-23 is 5 lakh 60 and 10 lakh rupees. 6 lakh 32 lakhs interest also is given to you till 31st May 2024 of 90,000 and self-assessment tax paid is 1 lakh rupee. She approaches you to file the updated return on 139 8A on 16th May 2024 for all the years. You are required to prepare a suggestion to give her in respect of this. Your suggestion should include the financial aspect also, like payment of tax, briefly outlining the relevant provisions of Income Tax Act. She's coming and saying 3 years I missed out. For all the 3 years, I'm proposing that I want to file the return on 16th May 2024. They're asking whether you can do so. And if you can do so, tell me what is a tax payable. Tell me what is a tax payable. Now, I told you when I was discussing this in the class also, people, updated return, technically they will give you all computations in class exams. The only thing which you will do is the 125 or the 150%, nothing more than that. Yes. The first thing which you need to keep in mind is that for 21-22, you have 2 more years in hand, which means you should have filed the return by 31st March 2024. 31st March 2024. Can you file a return beyond 31st March? Answer is no. 24 months is what you get. 24 months is what you can get. Check if this person is filing it on 16th May 24. On 16th May 24, so which means I will come and say, I'm sorry, this is not permissible. This is not permissible. No updated return is happening for 21-22. Coming to 22-23. 22-23, if you notice, it comes and says my tax payable is 5 lakhs, my TDS deducted is 10 lakhs. My tax payable is 5 lakhs and my TDS deducted is 10 lakhs. Can you file an updated return for this? Answer is no. Answer is no. Understand, updated return, I came and told you that updated return provisions come and clarify that you can only file an updated return when the return ends up in a tax payable model. When the return comes back in a tax payable model, since the person is going to claim a refund out of it, they will not get you file an updated return. Not possible at all. Completely not possible at all. You should have an updated return to the sense that you should have a tax payable because I want to collect extra taxes from you. So 22-23 is also not getting filed. Coming to 23-24, the tax payable on the total income is given as 6,30,000. TDS deducted as 2 lakhs. Add an interest of 90,000. Self-assessment is 1 lakh. Let's check how it works. So you have 6,30,000 card tax. Deducted amount is 2 lakhs. Added amount is 90,000. And self-assessment is 1 lakh. This is what it looks like. So I will do 6 lakhs minus 2 lakhs plus 90,000 minus 1 lakh. Number comes as 3,90,000. Number comes as 3,90,000. Let me check quickly. 7,20,000. 7,20,000 and then no, I think something is wrong. 6,30,000 minus 2 lakhs plus 90,000 minus 1 lakh. Yeah, it's 4,20,000 basically. It's 4,20,000. Now notice this is for assessment year 23-24. This is for assessment year 23-24. Assessment year 23-24 due date lapsed on 31st December 24 and therefore the person is filing in the next year. No. Yeah, the person is filing in the next year, which means it is within the period of 24 months. It is within the period of 24 months. It is within the period of 12 months. I'm sorry. It is within the period of 12 months. Because it is within the period of 12 months, we'll have to pay an additional 25% on this. We'll have to pay an additional 25% on this. So it is 4,20,000 into 25%, which becomes 1,05,000 extra. 1,05,000 extra. The total tax which you will have to pay is 5,25,000. The total tax which you will have to pay is 5,25,000. This is what you will end up paying under an updated return model. Under an updated return model, and that's all the question is. Yes. Now, if you come and ask me, I would prefer that a person would have not done question number 2. I would have honestly preferred that the person does not do question number 2, because question number 2, the residential status question, was definitely not easy. Yes, the residential status question was not easy, and then you gave in something called as the TDS. I don't think people would read anything relating to 2061H or interest under 201. So I would prefer you not doing question number 2. I would have rather recommended you to do question number 4. So if you have ended up doing question number 4, I think on the theoretical part of it, the first one you could have definitely scored. Out of the 4 marks, you could have got the 2 marks on this, and the balance 2 marks there, if you have done updated return a little bit carefully, not by reading through all the provisions, but a little bit, you could have got this full 4 marks. If you have not done that, oh, no, give me 1 second. Okay. Understand, people, it is like you can either do 1 and 2, or you can do complete updated return. That is how the provision is. Okay. So either you have to answer these 2 theory questions, or you have to answer updated return question. So if you answer the updated written question, you get the full 4 marks. But if you answer the above question, I think you could have easily scored the 2 marks on this. The TRP, if you remember, then you could have done it. Otherwise, you might have lost marks there. A little bit of both is what you would have done. Yes. Let me do a quick check and tell you how much probably a person could have scored. Again, I'm being very cynical here, people. I'm just doing a very high level analysis of it. I'm not telling you that this is what you could have scored. Just giving an idea of it. In case you have gone for, I would probably assume a person would not take an updated written answer. So probably if you have done this, you could have got 2 marks here. So it is 2 marks here. I told you here I could have maximum scored 4. So another 6. Yeah, I think, in this, I think if you would have missed 54B, you could have probably scored another 2 marks. So another 8. Employer question, I think you could have made a mistake in RFA probably. Yes, so maybe let's say another 4. So 12. TDS question I'm definitely not doing. Yes, 12 plus another 7 here. Yes, so 19 is what you could have scored. And yeah, I think in the MCQ part of it, we already kind of discussed. You could have scored another 2, so 21, 23, 24, 26, 28. Yes, so I think in the most optimal sense, a person on an average mindset who would have read this in a hurry could have probably scored 28 out of 50. 28 out of 50. I still don't see it's a bad mark, people. Yes, understand, in a paper like this, yeah, you're not expected to make wonders out of it. IDT paper, as much as I heard, I'm not sure really about it, but as much as I heard, it was a paper which was solvable. Yes, compared to the previous years where I normally would see income tax not being solvable and IDT being solvable, this time it's the other way around. I am seeing income tax being not solvable and IDT being fairly solvable. So if you would have spent a little more time in IDT and you would have scored that 50 and then probably another 30 marks, 28 here, another 30, 58 is what you could have easily got. Yes, at best, okay, let me be conservative about it. In case IDT also went back, maybe another 20 also you could have got. 48 is what you have easily got. Getting anything more than 40, I think in this paper is a great job, is what I would say. Yes, that is what my recommendation would be on this paper. But yeah, I mean, I'm quite surprised with the paper they've made. The kind of adjustments have very, very minute thoughts about what can go wrong. Yes, the paper was made in a very, very, I would say, in a not conducive atmosphere is what I can see. The person who set the paper really tested your standards and really put you on the bar. Yes, a person who has really not done the subject on a very granular level and understood it on a very detailed sense could really mess up the whole paper, because the paper kind of looks like you can answer things, but when you really get into the specifics of it, a lot of things can go wrong. Yes, that is what I probably noticed, at least on the MCQ front. At least the way they have tested MCQs and the minute differences which they made in MCQ can really make an impact, right? So very, very interesting paper if you come and ask me. For all my students of Jan 25 who are watching this video, I would really recommend that after a few days, once you complete the whole reading of the paper, solve this paper once again. In my class, and as much as I've done it along with you, you may have understood a few things here and there. You may be able to recollect what I've done. But when you really sit and solve a paper like this, you will realize where it goes wrong. Yes. So for all my Jan 25 students, please take some time, read through the whole subject once again, very patiently, very carefully, and then solve this paper. After you solve the paper and you see this video once again to see whatever mistakes you are, my sincere recommendation, people, is to go back, take your concept guides, make those additions and notes. make those adjustments and notes, because one thing which I can promise you from this paper is if you have solved this paper and you have made the notes against this paper, they have kind of tested everything which can go wrong with your subject. And so for the next attempt, when you look at the book, if you see the book and you are able to find that adjustment there, it itself gives you an indication that yes, this is not a mistake I should do in the future. Yes, I would say you are very lucky that you were not a part of September batch, and therefore you should take this opportunity in the best sense possible. Make all the adjustments, make all the notes, highlight all these important small things into your material, and ensure that the next exam when you read, you make special attention and note to this, so that in case they come and ever test this in your exams again, you should come and tell, yes, I knew the answer, this is what the adjustment is. Yes, if you can come to that position, people, that's when you're becoming a better CA. So that's what my recommendation would be for all my September 24 friends. I know the paper was bad. Trust me, it is not bad for you, it was bad for everyone. Yes, and so it will very clearly be taken note by ICI. ICI will make sure that this is not the reason why you failed this attempt. ICI will try the level best that if you have done justice to the paper, not by ignoring the paper, but by giving your efforts. If they show the examiner that yes, I've tried my level best in the paper to the extent I could understand it, that is enough for the ICI to give you grace marks enough. Please don't worry about what has happened in income tax papers. If your other papers have gone well, please assure yourself that ICI will take care of you when it comes to exams. Even if it doesn't do so, note that this was a good attempt. It was anyway a free attempt given to all of you people. Let's be honest about it. Let's be honest about it. Where everyone was supposed to write a May and November, you were given an additional benefit for not clearing May by writing September. So therefore, it was anyway a grace attempt given to you, because you anyway have an other opportunity coming up in January. So in case you do not clear for unfortunate reasons, while I am sorry about it, please also bear in mind that this was a attempt which you got an extra bonus. Take this as a good opportunity to make sure what you made a mistake, you note down those things and come back stronger in Jan 25 with a promise that you will clear that time. Yes, that is all from my side, people. I would try my level best to make an answer key for you for this, while I would definitely like to wait for the ICI's actual answer key on this. I would also prepare an answer key and try to circulate it for all my Jan 25 students who are planning to attempt this paper, so that you can learn it from there also. Yes. Anyway, I'm signing off on this note, people. Have a great weekend. Take care. Bye bye.